welcome to Real Estate Connections. And this is one of the earliest episodes. And as an early episode, we've got to talk about money. Anytime you are thinking about buying some property or long term, short term, it seems like the common issue is where's the money? And so, in thinking about who to share this information with you, immediately the name Tony Cardinelli came up. And why did it? Because the people in my community always say Tony, and not only for service, but really for information as well. And I've seen Tony's YouTube and it's terrific. So I know we're going to have a really terrific time talking to Tony Cardinelli today. And Tony is with a mortgage company called CrossCountry Mortgage. Tony and I talked about what is the best way to start talking about money. And he has a little kind of name that he uses when he starts talking about raising money to buy property. Welcome, Tony.
Yeah. Thank you. Thank you very much. Well, I really enjoy being here, and thank you for inviting me, and happy to be sharing a little bit of knowledge and information to help people today.
Great. Very,
So
very
my
good.
pleasure.
Well, I know you've been in the mortgage, mortgages. So mortgage is money you need to buy
Yeah.
a house, right? Through a lender.
Yeah.
And I
Yep.
know you've been in this business a long time. Not that you're that very old, but you have been through a
That's okay.
number of ups and downs in this whole market.
Yep.
So I know each market feels unique and like there's never been anything like that before, but I'm sure there has been. And so I know
Mm,
you have perspective. Um, and so Tony, the challenges today are not only raising money, but the other issue is availability, has been availability. And also
yeah.
real estate is so local that as
Yeah.
you're kind of sharing with our listeners to think about maybe what might be specifically New England, Massachusetts, Eastern New England, but what you might see also elsewhere. So let's talk
Yeah.
about where people get money to buy houses these days. How do they afford them?
It's a Yeah, no, it's a great and when I speak about and I call this the shaking the money tree. It's just a funny old term that I've heard in past in our industry. But yeah, very early on in my career, I wrote a small article called 21 Ways to Make Your Down Payment. And this was just an exposure to people, both real estate agents and clients, how they can come up with the money to buy a home. Now, obviously, I'm in the mortgage business, so financing is always a part of it. When I'm speaking with somebody, we're talking about getting a mortgage, but there's always down payment concerns. There's money, where are we going to get the money for the down payment? There's going to be some closing costs. There's going to be some taxes and insurance due at closing. And so people are always wondering, where do I come up with that money? And we really put together this list just to help people just jog their memory, think of different ways to raise money, solve a problem. Perhaps an agent runs into a family that is looking to buy a home and they don't think they could. And this was meant to empower them to feel like they've got an option. So I cover these 21 ways or 20 ways, whatever they are today, very frequently when I'm talking with
Mm,
buyers. And I'd be happy to share some of those with you
okay.
today.
So, I mean, there are several major categories. There's the first time home
Yeah.
buyer, and then
Yep.
there are people who are into their second, third, or 10th, version
Right.
of it, and they have very
Yep.
different circumstances typically.
Yeah.
So why
Yeah,
don't we
for
talk
sure.
about maybe first-time home buyers? What
Okay.
should they expect from talking to a lender?
Yeah. In Massachusetts, so in New England, in all of the United States, there's a first-time homebuyer program, two of them, most notably sponsored by Fannie Mae and Freddie Mac. There's Home Ready and Home Possible, they're called. You can look those up on the internet. They allow for 3% down payment. So you have to have a pretty good credit scores typically to get into a conventional conforming loan like this. It's not a government loan. It's not an FHA or backed mortgage, or it's not a VA loan. It's not a USDA loan. This is a traditional Fannie Mae and Freddie Mac mortgage. So many lenders, in fact, I'd shudder to say most lenders will do a Fannie Mae or Freddie Mac mortgage for somebody. It's probably 70% of the market that's written
Oh,
today is conventional conforming
mhm.
financing. But with that, you still often need a down payment. And that's where we come up with these different ways to raise the money for down payment. So we're talking 3% of a purchase price. It's not a lot typically, unless your purchase prices are quite large in an area like Massachusetts, but it can be large. And that's the challenge that people run into is sometimes they don't even have that. It's been hard enough just keeping the dollars and cents coming in to pay other bills in your family, and you can't always make that. So down payment assistance is available here in Massachusetts. We have the Mass Housing Mortgage Program. It's one of the best in the country. In fact, I talked to my other branches all across the country, and they say Mass Housing is one of the best, what we call bond programs in the United States. That means it's one of the best first time homebuyer programs here in the United States. They will provide you 3 to 5% down payment assistance, and sometimes that means even more than your down payment requirement. So if you have the 3% down payment requirement, you can get sometimes up to 5% in down payment assistance from Mass Housing.
Wow.
Now these are mortgages. They're second mortgages. They are not grants as they were called in the recent past, where there was some federal money or state money available. These are really just second mortgages. They're usually 15-year mortgages at a very low interest rate of 2%. They do have to be repaid, and you can't refinance them can't resubordinate them and keep them forever. You have to refinance them if you want to get yourself into a lower
Mhm.
mortgage later.
Wow.
Okay. So that hopefully sums up down payment assistance. That's one of the places we get down payment
Mhm.
assistance.
And how do you qualify? Is there an income threshold? Yeah.
Yeah. Yeah, it sometimes can be challenging, especially here in Massachusetts, where property prices are so expensive. It's sometimes challenging for people that if they can afford the house, sometimes they can't qualify for the program because they might make too much money. So that there's a tug there between making too much money to not qualify for
Mhm.
the program, mass housing program, to get down payment assistance, and then the other side of that is the inability to afford the house if you do qualify for the down payment assistance. So you really do have to be strategic about where you're shopping for homes. You have to work with lenders that understand the program very well and can make sure that you're qualified. And you need a little bit of a margin of error. You can't
Squeak
just barely
by.
make it.
Mhm.
Yeah, because we've had people in the middle of transactions all of a sudden work a little overtime, and mass housing says, "Oh, now your income is much higher than the qualifying income for the area, and you don't qualify anymore." So we've had to run around and solve some problems in those cases. So you do want a little bit of a margin of error. Again, working with a lender that's doing their due diligence and educating you correctly so that you're not in trouble during your
So you could
transaction.
have a pretty expensive house that you still need to have put down 3%, 3 to 5%,
Yeah.
but you also
Yeah.
have to have the income to support that, but not too much income to support that.
Right. Yeah, just for the mass housing
Yes.
program. So Fannie Mae and Freddie Mac have a little more leniency. You can often make more money and get into the
Mhm.
Home Ready Home Possible program, put 3% down. Um, if somebody doesn't fit into mass housing, if somebody doesn't have the 3% to put down, if they have decent credit as well, we can also use the National Housing Partnership Funds, which is a down payment assistance program nationally. Sometimes we go through um, um, Chenoa, which is a Chenoa Foundation. They do provide 3 or 5% down payment assistance. And you have to understand the interest rates on these mortgages that we do for these down payment assistance programs at these higher purchase prices when you don't qualify for mass housing are often
Yeah.
higher. So sometimes it's not a payment that you really want to bite into as a first time home buyer. And so you may realign your goals and save up a little more, get gift funds. And we can talk about other places to raise money for that down payment that you need. But you can buy with 3% down on very
Yeah.
expensive homes.
So, boy,
That's a
it
key.
sounds like your lender needs to know what's available.
Yeah.
Unbelievable. Tell me
There's
about gifts. I know
right.
that there are
Yeah.
pluses and minuses of gifts, right?
It's a great place to get funds for down payment, especially when you're getting a gift from a family member, a relative, and lenders really want the donor of that gift to be a family member, or they want that donor to be there needs to be a logical reason that donor's giving you money. It's just some dude and they said they're going to give you some gift money. It's going to be hard to convince a lender that that's a
Mhm,
legitimate gift and that doesn't require
mhm,
repayment. So, but gifts are allowed. There is no limit to the amount of gift of a family member can give
hmm,
you. It is often just 3 or 5%, just because families don't have lots of money to throw around. Um, and you really want to talk to an accountant. I'm not going to get into the tax laws here, but I do want to say I learned very recently from a CPA that there is a lot of misinformation about gift taxing out there. So talk to a good accountant. If you don't know one, I can refer you to one to get the real information about family gifts. What happens when you give a gift? What's the taxation requirements? What's the
mhm.
reporting requirements? Because it's fascinating and it's different than what I knew.
And changing, probably changing.
And by the way, it's not
Oh,
bad. That's the
hmm.
best part. It's actually very good, and I was pleasantly surprised when I got
Oh,
the
lovely.
information.
So it's
Yeah,
interesting of these programs that you're describing that are particular to Massachusetts. What percentage of your
yeah.
business are they? Or people that might you?
The programs, they are probably a very large
Ah,
percentage of many mortgage companies around here because it's a great program, and Mass Housing is a
mhm,
fantastic program. New Hampshire Housing is
mhm.
also good. Maine Housing is good. There's Rhode Island. I mean, every state is going to have their own bond program. Just Mass Housing's
Wow.
phenomenal. Maybe 10 to 20% of our business is first time home buyers and Mass Housing type programs. Um, but again, it depends on the area that people are
Mhm,
shopping in. A lot of people don't
mhm.
qualify, you know. They don't have the credit scores. You have to have decent credit. You have, pretty good credit. You have to be able to qualify for conventional financing. Typically, that's usually what people will use when they use the mass housing program. Otherwise, there are other
Mhm.
options. We'll use FHA financing for 3.5% down, where we can get this, down payment assistance from the National Housing Fund. Um, lots of other ways to do zero down payment down with, if you go with a VA
Oh,
loan, if you're a
yes.
veteran, you get zero down. There's no down payment requirement, no monthly PMI. You can go with a USDA mortgage, although we don't use them much around here because you need to be typically in rural areas. But USDA is a great program, very much more sensitive with debt ratios. So it's hard to qualify for a
Mhm,
USDA loan, especially
mhm,
in New England because our prices are
mhm.
so high.
Yeah. So,
Yeah,
it's fascinating. What
lots
about,
there.
seller bias? I mean, in a tight market, I think that even though
Yeah,
these are
right.
wonderful programs, we see there's a lot of frustration out there. Yeah.
Very
Are
true.
you seeing
And
any
you bring up a
change?
great point.
Any softening? No softening.
I have to say it certainly softened October, November, December, started softening more. Right now, I wouldn't say it's soft. You're going to see it heat up again this spring as interest rates continue to fall. More buyers are going to come back into the market that were frustrated last year. They saw prices falling in the fall and they think it's going to
Mhm.
continue on. And what we'll see is more buyers enter the market likely this spring, and just more competition is just going to bring, more bidding wars for properties, and the prices will continue to
Tony,
climb.
I read that the average first-time home buyer is 40 years old. Is that true?
Oh, it's sad. It used to be 31, I think it
Oh,
was.
it is. I mean,
So
it
that's
really shows how we're keeping first-time
yeah.
home buyers out.
Yeah, it's sad, and it's affordability. I mean, we really are short inventory. I was told in 2015 builders started scaling back their building and new construction, and they just haven't caught up since
Mhm,
then. And that's a problem, obviously, here in New England. They are trying to ramp up, but again, the economics have to make sense. Cost of construction,
mhm.
materials, all of that is causing
Oh, it
problems.
is. I became an agent in 2009 down in Northern Virginia, And
Mm.
boy, it was the dark days, real dark days.
Yeah.
One thing that
Yeah.
did happen then was underwriting became so difficult. And,
Yeah.
getting the final approval on a loan was so, so difficult. Are you
Yeah.
still
Yeah.
seeing a lot of kind of underwriting headaches? Let's have that document one more time or three more times, and again, more frustration on the borrower's side. Do you still see that?
Not no different than I've seen for 23
Huh.
years. Honestly, I think communication is one of the biggest challenges in the mortgage industry is the ability to communicate with empathy and perspective what a lender really needs and to do it in a way that somebody understands because everybody speaks differently. They learn differently about finance and checking
Mhm.
savings and their bank statements and pay stubs. And so a lender's ability to communicate why and how and what we need, where to get the documents really makes a big difference in what is delivered to us. And people think it's okay to just take a picture with your phone and shoot it in, even if it's blurry. And in the end, in the beginning, that may be okay because we might be able to read it, but in the end, it may not make it all the way to the investor, to the ultimate Fannie Mae and Freddie Mac, and underwriters might push
Mhm.
back on it. So again, it's communication, I think, that causes most of the
Mhm.
problems between lenders and buyers and the frustrations
How do
out
you deal
there.
with that? You get a new client, somebody calls you up and says, "I wanna buy my first
Yeah.
home." How do you, kind of work toward eliminating those boundaries, those barriers?
It's you really have to treat the person the way not treat them, but help them the
Mhm.
way they need to be
Mhm.
helped. That's what I was trying to say. It's really you have to understand your client, understand what's important to them and how they communicate, and you'll start getting clues when they start taking half a snapshot of a half a pay stub with stuff missing, and you'll start getting clues that this one's going to need a little bit more help and guidance. And I'm a lifelong learner, so whenever something goes a little bit crooked in a transaction and someone gets frustrated, I learn from it and I change our processes, I improve
Mhm.
our ways, and we've got team members that's all they do is communicate with buyers to help them gather documents. And the more people you have, I think the not the more people, the better people you have on your team, the better the communication with your clients will be, and the easier you want to make that process for them.
When new buyers,
Yeah.
are they able to use, rental payments as part of their credit history? I mean, is it
Yeah. Yeah, we can do that. It's little known and little done, quite frankly. A lot of people do have credit today, but home buyers that don't have credit yet or haven't established credit can actually, have credit built for them during their transaction. And if they've got rent payments, cell phone bills, gas cards, credit cards, things like that that they pay regularly, we can establish a credit history with that. There are programs out there that allow us to do that and close on the mortgage with them. They're first time home buyer programs. And, they'll be a home buyer and establishing credit at the
Mhm,
same time,
mhm.
basically.
Wow.
So we do
So
help with
what
that.
else do we on your shaking the money
The
tree,
money tree.
what
There's some cool stuff I want to share
yes.
with you, actually. I love sharing things that is little known and that people get to use to their advantage. One of the little known things out there, I get these calls and I get so excited when someone calls me with a scenario and I say, "Oh, I got the answer for that." One of them is a gift of equity. Again, a gift of equity is one of the magical ways a family member can gift equity in a home when they're selling a home to another family member. Parents are often selling to their kids their lifelong home and they're downsizing, and the parents can actually gift equity during the transaction at the closing to help their child, if that is, or niece, nephew, whatever it might be, a grandchild, purchase the home from them. And when they gift equity, it's an instant passing of equity from the seller to the buyer. And therefore, the buyer doesn't need a down payment in that case because the down payment has been established with that
Are we
gift of
talking
equity.
about the family home? Are we talking about any home?
Any home that's going to be a primary residence for the buyer.
Hmm.
Yeah, so it's fantastic. It is not well known. It's out there. It's available. It's just a part of the guidelines, if you will. It's a donor source, if you will, and it's a type of gift, but it is a really helpful way. And we've done these. I've got a special spreadsheet because I love spreadsheets that helps me figure out that a home buyer can actually purchase a home with $0. Like the family member can gift equity, a sufficient amount of equity, credit at closing to pay closing costs, taxes, insurance, and everything, where the buyer comes in with absolutely nothing. So a first-time home buyer with no money buying a family home from a blood relative can receive all of the money for closing, down payment, and everything through this gift of
Okay, so
equity
let's see if
program.
I can figure out how this works. Let's say we have $500,000 equity in this property, and our daughter wants to
Yeah.
buy a condo in, I don't know, Boston. Oh, please, no, please, please. Anyway, um, and she needs $500,000 to get that. So I don't know that she'll be able to find one in Boston, but that would be the total value, the total cost of the property.
Well, the property that is being sold is the home where the equity is
Okay.
being gifted from.
Aha.
So parents own 123 Main Street in Chelmsford, want to sell that to their daughter because they want to downsize into a new home, and they can gift some amount of the equity. Could be 3 grand of the equity, could be 30%, 20% of the equity. And oftentimes it's 20% because then the daughter buying the home from the parents has no PMI, no down payment requirement, can come in with no cash to close. I mean, all the closing costs, tax, insurance, everything is set up and paid for with it. It's
Mm.
fantastic.
We
Yeah. So gift of equity is a great one. Again, talk to your CPA about cost basis. Talk to them about gift taxing, gift reporting, that sort of stuff. You'll be surprised and happy to hear how it works. And it's also important to talk to a CPA when you're passing real estate to another family
Mhm.
member, just for that family member's future taxation and capital gains,
Hmm.
that sort of thing.
And I've gotta
Okay,
do a
just
little
a
more.
little
Yeah,
word
I've
for
gotta
the
understand
wise.
that just a little
Yeah,
bit more because that is, that sounds wonderful.
it's wonderful. It's great, and be happy to talk with
Great.
anybody about it to help them understand it better. There's also little used, often overlooked things like bridal registries. You could be getting married and you're getting a whole bunch of funds dropped into a bridal registry, a gift fund, and that can be used as down payment money. Your parents can borrow the money and gift it to you from their equity line of credit.
Wow.
That's allowed. Charitable organizations, often employers can gift money to an employee through an employee gift program that we help them establish.
I am amazed.
Proceeds from the sale of
Oh,
personal items. Automobiles can be sold with a bill of sale, and you can use those funds for down payment. All this kind of stuff.
we need to hone in on some of that very specifically because,
Yeah.
wow, that's terrific. I've not heard of these before.
Yeah.
Yeah,
Right.
terrific.
Yeah. Lots of ways, and you learn about these over the years because you run into people that are just struggling and you want to help them, and so you go through this brainstorming checklist of things that they can. And I'll share the 21 ways
Okay.
to make your down payment. I think it might be 20 now. I might have
Eliminated one.
shrunk it down to 20, but I'll share that with you. It's a checklist you can have, share with your listeners, and they can use it readily to just kind of shake the money tree when the time comes to figure out where they can buy. We've used rent credits before. People can do a lease to purchase. That's a down payment source. Less often used. There's some guidelines there that you really need to know about. It's not willy nilly. There is
Rent
some
to
specific
purchase.
guidelines to follow when you're doing lease to own
Yeah.
type down payment assistance. Um, use this once before trade equity, sweat equity. That's a
Mhm.
little dangerous. I typically tell people to stay away from
Mhm.
sweat equity and fixing up a home before you own it,
Yes.
and then getting that as down
You
payment.
can see the warning
So be
signs there.
careful.
Yeah.
Yeah, be careful with that. But yeah, those are some of the cool ways that people can raise money to buy a home. Obviously, there's a lot more I can share with you, but do you have any
Oh,
questions?
I have a million questions, just a million questions. So this state and 19 states total have passed something called accessory dwelling units.
Yeah,
And I want to talk a little bit about that as a way of trying to alleviate some of the housing shortage here, right?
yeah,
And
yeah,
also as a way to build wealth.
yep,
Also as a way as probably transition for older homeowners to move out of the demands of a big house and yet
right.
and move into a small house or accessory dwelling unit. So Massachusetts is one of the initial 11 states. New Hampshire just added, but a number of other states across the nation are moving into this accessory dwelling unit. And I don't know
Yeah.
how they're being funded, but have you encountered them much at all in your own experience?
Yeah,
Uh-huh.
not a lot. I mean, certainly, we've done a number of mortgages for homes with ADUs, so that's a very common thing. So there's no shortage in clients that I've closed, even in the last couple of years, that purchased a home that had an ADU already built. What Massachusetts did, I think, is made it a little bit easier to build
Right.
the ADU on the property, and that's a really a life saving thing for a lot of people that are maybe aging. They want to age in place. And this is a solution for them to kind of hitch, partially hitch their wagon to their kids' future by selling the family home to their kids. And the kids can build an ADU using financing for their parents to live in on property. And the parents can age in place, which is a goal of many of them because they're still active, right? And this allows them to
Mhm.
do that and build the, accessory dwelling unit right on the
Right.
property.
And then the family home can be occupied by family, children,
Yep.
or can be occupied by somebody renting it. And so you are bringing income either way. You're renting the ADU out to a third party,
Yeah,
or
yeah,
you're renting
usually.
the major home. And I understand even duplexes. If there's sufficient space, you can actually duplexes can actually put in some an ADU. It's fascinating, but I think in this state, what we're seeing is the town slowly kind of,
Yeah,
trying to adjust to the intent of the law vis-a-vis what
yeah,
they really want for themselves. And so
right.
we're seeing a little bit of resistance here and there.
That's right.
But what I hear you
Yeah,
talking about is the old kind of mother-in-law apartment or yeah,
right.
or yeah.
Most common.
So when I became a realtor, the county that we lived in did everything it could to prevent density. Okay,
Yeah,
so no mother-in-law apartments unless you're proving that that person is related to you.
right.
No stoves in the basement.
Right.
No excessive asphalting of the driveway or the yard. And now we're in
Okay.
a different time, and you get to see
Yeah.
it too. What does your crystal ball say about how are we going to get more housing?
I think really it's gonna probably happen at the town level, the state level, if you will, even just empowering builders to build more and loosening up requirements to convert property into housing, especially
Mhm.
condo developments. um, because we do have a shortage of housing, certainly a shortage of land in a lot of these areas to build
Mhm.
housing. So a lot of it's converting the older inventory into newer places, and that does require the towns and historical commissions to allow for it.
We have a dog here at the door. The
There's a
dog at the
cheerleader
door,
right
yes.
there.
Here you go, here you go, come on, hey. That's Woody, and he wanted to have his 2 cents in here as well.
I
Yes,
agree.
he
He
agrees
agrees with
with you,
me.
he is, he's very smart. He's a very smart dog.
I love it.
So, and the other group of people are the people who have property already, can sell their
Yeah,
property and use the equity to be maybe a cash only buyer, and thereby
yeah,
keeping out,
right.
those many, many people who want to buy a home who just can't get in there in terms of the deal. And
That's right.
so what are the options, or is there anything really clever, if you know, how do you manage the timing of, okay, I want to sell the house and I want to move into something smaller or a community or
Yeah.
whatever. What is the process there?
That's it's a great question. It's a pretty big question because there are, we've put together 7 ways to be non-contingent on the sale of your departure
Mm.
residence, and we did that for a reason because so many people today are struggling making an offer on a home when they are contingent on the sale of a departure home. So the problem speaks to the inability to get a seller to really accept that they need to wait for another sale to happen. That's part of the
Yeah, part of the
challenge right
challenge.
now,
Yeah.
really getting a seller to let you, to
Yeah.
be contingent on the
Yeah.
sale of a
So,
departure. So that's a whole
oh
'nother session
my,
we could
oh
have
my. Well, I know
together.
we only have a few minutes left, so here are the questions for you, Tony. Tony,
Mm,
for you, to me, you have the magic combination of being in service to people and also having
mhm.
knowledge and experience. So,
Yep.
to our listeners who, don't know Tony's yet, what advice do you give people as they're looking for a lender? What are the good signs to look for that they know what they're
Well,
doing and they will serve you?
yeah. You know, it's a good question because I can tell you, we do things very differently than a lot of lenders out there. But I think the best source for a finding out a trusted professional is a real
Ah,
estate agent. Real estate agents to me are really, I saw an analogy today. They're the Formula One drivers in this whole process. They are the ones that are really captaining the ship through the storm
mhm,
of buying a home. And it's important to align yourself with a good real estate agent, a buyer's agent, a selling agent. If you're selling a home, align yourself with a good one and ask for their professional recommendations to people because they've been in the business a long time, probably. If you're working with, ones where they've done a number of transactions, and they'll know
mhm.
who to talk to and who treats clients very well and is
I agree with
knowledgeable.
you so much. I really do.
Yeah,
I
my
would,
best advice.
as realtors, we aren't allowed to steer much, but I would give you maybe a couple of names of lenders that will get you to closing. That's the way we look
Right,
at it. Will get you to
right,
closing, and
right. And communicate well,
communicate.
right? I mean, because we started out talking about communication, and I think that's one of the biggest complaints is people don't communicate well. They take things for granted. They assume a lot, and I think communication is the most
Indeed.
important thing we can
Indeed.
provide today.
Every time we talk to a CPA or something like that, I have no idea what a third of the terms mean. And I have to rely on my
Right,
spousal unit to say, what did
right.
that mean? And what is the significance of that? And so that's really, really true. And a lot of my clients in Northern Virginia are from overseas, smart as a whip,
Uh,
doctors, etc. And there was a lot of education that was required, a whole lot of education. But so I think that's really terrific. Um, I have so enjoyed talking with you today, and I know we'll have you back. And
Excellent,
you're a great resource, and I love your YouTube site. Love it.
wonderful,
So,
wonderful.
listeners, make sure that you check into Tony Cardinelli on YouTube. It's all these lessons, these small lessons that I feel like I've just got educated again.
Yeah, wonderful. Well, thank you for having me,
Thank
Mary. I
you,
really
Tony.
appreciate it.
Thank you very much.
We will see you
And
soon.
before you end recording, I just want to thank everybody for listening in and spread the word. And also, we are resources to refer you to other professionals in the area, no matter where they are. We are national human beings in many, many ways. So we'll have emails in the show notes. We'll have contact information for Tony at CrossCountry, and anything else he wants to listen to. So thank you, everybody. Thank you so much for joining us today. And I hope you found this conversation useful to you and your real estate goals. You'll find the contact information for our guests and any links they recommend you have in the show notes. And should we be able to help you identify some strong real estate professionals in your area, drop us a note at info@realestateconnectionspodcast.com. Thanks again, and bye for now.